Good morning. I think we're going to kick off now. Morning and welcome everyone. My name is Karen Sandu. I work at London & Partners. I'm delighted to be hosting this Q&A session with two of our valued commercial partners today, Joelson Law and First Office Hub. This is a third of in a series of weekly sessions taking place over the next few months. Thanks to all our panel and participants for joining today. We hope your families and friends are well and safe. And I hope everyone can hear me. So, just a few housekeeping items. Just to let you know that we're recording this session. You do have the functionality at the bottom of the screen to ask a Q&A, chat, or raise your hand. But if you could only use the Q&A tab, that would be fantastic. If you have any technical issues with the session, please write this in the Q&A tab too, and my colleague Lisa will be able to help and answer privately. So I lead the team in a financial business service technology space at London & Partners, helping international businesses as they look to set up in London. I'm also joined by my colleague Lisa. Lisa, do you want to introduce yourself?
Hi, my name's Lisa and I help international businesses with the practicalities of setting up in London and plugging them into relevant ecosystems. And today I'm helping with the tech support. So any issues, let me know.
Great, thanks Lisa. So for those of you who don't know, London & Partners is a trade, investment and promotional agency for London. We help to attract major events, conventions, businesses, visitors and students to London. During these challenging times, we're very much focusing on business resiliency. So our clients, stakeholders and partners are aware of the current business environment, opportunities available to them and all the work that is being done by our businesses and partners to help each other during this crisis. These sessions address questions on a number of topics, including funding, access to support, workforce planning, leadership, etc. And they'll be every week for the next few months and then going to 2 weeks. Our partners are extremely important to us, hence the London & Partners, and their work is fundamental to the assistance that we give our clients. So we're excited to have them here today. I'm just going to send over for intros to Sheldon, Phil and Jennifer. If you could introduce yourself, just to give a brief on your role and just a very short brief on Joelson Law, that would be great.
Thank you, Karen. If I kick off, good morning, everybody. We are, as a firm, a full-service law firm. We're based in Portland Place in the centre of London, and we're around 80 people in total. So that's 80 proactive and dynamic lawyers and support staff. We've worked closely as a commercial partner with London & Partners for many years, advising and supporting businesses literally from all over the world. As a firm, we've got a strong international business focus and we help businesses and entrepreneurs with all of their legal needs. So that would include establishing companies and branches in the UK, immigration and visa issues, intellectual property, protection, registration and enforcement, hiring employees and their contracts and terms and conditions, share option schemes and so on. We also handle real estate and construction work and advise on all types of commercial agreements and commercial issues. And of course, we handle, when it comes to it, litigation and arbitration as well. So I'm delighted to be here this morning with two of my fellow partners, Phil and Jenny, and I'll leave them to introduce themselves as well.
Thank you, Sheldon. This is Phil here. I'm one of the partners in the corporate and commercial team in Joelson. We advise on a very broad range of legal matters, as Sheldon's already outlined. And today we're going to be talking very much about the funding that is available from the government in these very challenging times.
Hello all, I'm Jenny. In the employment team, a partner in the employment team at Joelson. It's certainly been a busy time for us employment lawyers. As you know, we have the furlough scheme, which is potentially due to end at the end of June. I'm going to be chatting a bit about that with you this morning. Our team offers a full range of employment law services, including employment in corporate transactions, advising HR teams, advising startups on their employment compliance requirements here in the UK, and also assisting with visas, which is often the first point of need for people setting up in the UK. And we're looking forward to sharing our thoughts with you this morning.
Great, thank you all. And finally, Clive and Pedro, can you just please introduce yourself and give an overview of your role in First Office Hub briefly?
Yeah, good morning to you. Thank you first for inviting us to participate, much appreciated. My name's Clive Buckley. I'm the founding partner of First Office Hub. We are a serviced office specialist working on a worldwide basis, based in London, with an emphasis on the London market. We've been working now with London and Partners for nearly 6 years, and we help companies of all sizes, from one person looking for a hot desk or a fixed desk, all the way up to companies looking for offices for 300 or 400 staff. So we work with a lot of over 100 different providers and over 1,000 different properties, and have access to a lot of different options throughout the space. And Pedro, who's I'm going to introduce, is my business partner and has been working with me now for the last 3.5 years as well.
Pedro? You might have appeared. Oh,
Sorry, mute. Thanks, Clive. So, Pedro Rangel, working at First Office Hub as a property consultant, also a partner, and we work with clients to find out what they need and what suits them best in the London market. So, as Clive mentioned, there's so much choice in London, so we operate as a tool for companies to help them identify the right space that fits budget, size, colours, styles, shapes, various locations, commute facilities to these offices. And so we're also a broker channel for these clients. Through us, they see better rates than directly. So this is probably one of the most attractive points of our service.
Great, thank you. Thanks all. So we're going to break this down into two. We'll start with Joelson Law, focusing on the funding schemes and furlough, and then we'll move to First Office Hub. So Sheldon, if I start with you. Sorry, just to let you know that we have received questions from all of the participants, so I will be feeding in those questions as well. But if you have any questions, just put it in the Q&A chat. So Sheldon, are you able to summarise the current measures which have been introduced by Her Majesty's Government to support early stage businesses during the current COVID-19 crisis?
Yes, of course, Karen. There's a number of schemes out there, and for people who want to understand a little bit more, go and have a look at the government website, which is www.gov.uk. But I think the three that we're going to touch on and focus on in some detail this morning are the Coronavirus Job Retention Scheme, which will provide support for businesses that need to lay off staff during the current crisis. We'll also speak about the Future Fund, and that's a matching investment scheme where the government will match investments in certain startup and early stage companies. And then the really new one, which was announced last week, was implemented only on Monday, which is referred to as the Bounceback loan scheme, where there are some very, very low interest rates applicable, as you'll see.
Brilliant, thank you. You mentioned the Bounceback loan scheme. It launched last week. Can you just briefly explain how that works?
Yeah, let me pick up on that one as well. It's all happened pretty quickly. As people may have seen, the UK Chancellor announced this new government-backed loan scheme only about 11 days ago, and banks have already been processing applications since the 4th of May, this Monday. And I gather from press reports, on the first day alone, 110,000 applications were received. So onto the detail of it, if I may. Businesses that apply for this new type of loan, they can do so without needing to offer any personal guarantees. And that, of course, is a big, big plus for a borrower. In fact, lenders are not permitted to take personal guarantees or take any sort of recovery action over a borrower's personal assets. So that would mean a home or a principal vehicle. But the one thing that's important to bear in mind is that the borrower will be legally responsible here for the decision to borrow the money, and it's not the lender. So the borrower will not have the usual consumer protections under the UK's Consumer Credit Act. And unlike the C-bills scheme that you've probably all heard of, the Bounceback scheme doesn't require the lending bank to show that the loan is affordable. Now, the monies are provided by way of loan, and therefore there's no EIS issues that would need to be addressed, and I know that Phil will pick up on that when he speaks about the future fund. For people who want to see the details of the scheme, they're all set out very clearly on the British Business Bank website. And the rationale of the scheme is to provide support to businesses across the UK that are losing revenue because of the virus outbreak. So let me next turn to the eligibility requirements, which are pretty simple. Businesses must be based in the UK. They must have been established here by the 1st of March 2020, and they need to generate at least 50% of their income from trading activity. And they need to show that that has been disrupted due to the virus. Businesses also have to self-declare if they were in difficulty on the 31st of January 2019. Now, that doesn't disqualify them, but it means that there will be certain restrictions that could be imposed, mainly around exporting. So you'll have picked up from the above, an overseas owned entity based in the UK is certainly within the scope of the scheme. And the published requirement on the website is that the business is a UK limited company or partnership or tax resident in the UK. Now, certain businesses are excluded, banks, insurers, public sector bodies, but all in all, it's a very short exemption list. In terms of timing, the scheme currently runs until the 4th of November this year. It may be extended, but that is certainly the operative end date at the moment. The maximum loan size that can be applied for is £50,000, and the amount that can be borrowed is entirely linked to the turnover of the business. And a business can apply for up to 25% of its turnover. Businesses that are looking for more than £50,000 can, of course, apply under other schemes, such as the C-bills scheme or one of the other government schemes. Now, what does the government do here on the Bounceback loan? What it does is to guarantee 100% of the loan. There is no arrangement fee at the outset, and there is no interest payable for the initial 12 months. And then after that 12-month period, you may have read in the press over the weekend that the interest rate has now been conclusively set at 2.5% per annum. So a very low interest rate indeed. In terms of capital repayment, there's a holiday for the first 12 months. There are no penalties for early prepayment, but the loan terms are up to 6 years. And the scheme will be delivered by accredited banks and lenders. I understand there's currently 10 of those that have been set up, and there are 25 people working within the British Business Bank on trying to set up more accredited lenders at the moment. Now, undoubtedly, there will be a very high demand for finance through this scheme, and the recommendation is not to make a phone call or to go to a bank branch. In fact, on the first day, Barclays got 200 applications in 1 minute, and understandably, they've suffered some real online problems. As I mentioned earlier, by the end of the first day, more than 110,000 applications under the scheme had been received. And Lloyds, for example, said yesterday that it had advanced loans already totaling £1 billion to over 32,000 applicants. That's just an enormous number. The average loan size is about £30,000 apparently. So how do you go about the application? Well, there's a very short application form on each lender's website. You need to fill that in. There's 7 questions on 2 pages, very straightforward. And you need to self-certify that your business is eligible for a loan. And the key message about the scheme is that it's absolutely targeted at supporting business that need access to finance really quickly. And so everything has been set up as a very straightforward, standardized product. So far, the initial response has been very enthusiastic. The CBI's chief economist stated that this will be a lifeline to many small businesses and sole traders under pressure. But from us as lawyers, just two final legal warnings. The first is that it has to be understood these are loans and not grants, and they therefore need to be repaid. And then the second is that despite the government guarantee, banks are required to first chase businesses for money if they don't repay the loans. So that could mean seizing assets and taking court action. But the opportunity is there. This is working capital for SMEs that really need to get themselves moving and very quickly. And we all hope that this is going to be a very successful endeavour. Thank you.
Okay, thanks, Sheldon. I do think we have a question on Bounceback loans, Lisa.
Hi, so there is a question raised on the chat with regards to the Bounceback loan. And the question is, I have a property company that owns and manages buy-to-let properties. I think this is in relation to, are there any sectors that are excluded from the scheme? He's asking, can I avail of the Bounceback loan through this company? It's a buy-to-let property company.
If it will qualify as a trading activity, then absolutely fine. The business itself is not excluded, but the testing is this 50%, is 50% within the trading concept. I don't think we've seen any further published information about that, Lisa, so far.
Okay, thank you. Thanks, guys. Just conscious of time, so I'm going to move on. Phil, can you provide some more details on the Future Fund?
Yeah, sure. I just wanted to check that the sound's working okay, because I think it was a bit quiet on the intro earlier.
It's a little bit quiet, but we can hear you.
Okay, great. So the Future Fund itself was announced on the 20th of April. At the moment, the rules of the scheme are relatively light. So the publication is on the government website, and they have set out a term sheet which sort of sets out the sort of headline terms. But the principal terms are that the government has allocated for the Future Fund £250 million for this scheme, and again it's being run in partnership with the British Business Bank. It's a matching scheme, so the government will match investors' funds going into companies of between £125,000 up to £5 million per company. So that effectively means that if you had investors who were putting in £125,000, the government would match that. It's due to go live this month, but at the moment we don't have any specific timings on that.
Okay, thank you. And how is the Future Fund's investment going to be structured?
So the structure of the fund is going to be by way of a convertible loan note. So essentially it is a form of additional borrowing, but that borrowing is unsecured. So it's a loan note which can convert into equity on certain triggers, which are set out in the loan note term sheet itself. And we'll come to sort of some of the headline details later, but in principle, it's a loan that is for 3 years. It's convertible into equity at any time during the course of those 3 years, and it accrues interest at 8% a year.
Okay, we've talked about the convertible loans. So can you just summarise the key terms of this, what it will offer?
Sure. So as I said earlier, the convertible loan will be for between £125 and £5 million per company. The loan itself goes for a period of 3 years, but it is convertible at any time in circumstances where the company undertakes an equity fundraise of more than the amount that's been borrowed, so which is called a qualifying financing round. And the conversion rate it's converted at a 20% discount to the price per share of the relevant qualifying financing round.
Okay, thank you. Are there any other notable terms which companies should be aware of in the headline terms for the Future Fund?
Yeah, I mean, there are a few kind of key things that we as lawyers would definitely focus on. The one sort of surprising area is the concept of a redemption premium. I mean, that's fairly normal in sort of the usual market for convertible loan note financing. But the redemption premium in the future fund is relatively surprising because it is 100% redemption premium. Now, this applies if the company has taken out a future fund convertible loan note and hasn't undertaken a qualifying financing round before the expiry of the note, so within the next 3 years. And at the time of expiry of the note holder, so the government and your other qualifying investors, have the choice as to whether they convert into equity at that point or ask for the company to repay the loan. And the repayment at that point would be whatever the principal amount is plus accrued interest, together with a redemption premium which is equal to 100% of the original amount borrowed. So if you borrowed £125,000, you'd have to pay back 125 plus accrued interest, together with another £125,000.
Oh, okay, thank you. Finally, just are there any other restrictions on raising capital under the fund?
There are, yes. So there is what's called a negative pledge within the term sheet that's been set out, and that effectively prevents the company from seeking any other debt finance from existing shareholders or other debt or other existing debt providers, unless that is for sort of to go to retail banks for normal debt finance. So you're stopped effectively from taking out other convertible loan notes without the consent of the current note holders under the fund. Okay.
All right, that's good to know. Thanks, Phil. I'm going to move on to Jennifer, if that's okay. Furlough is obviously a topic that a lot of people are very mindful of. And obviously it's coming to, well, it's until the end of June. So what is the procedure to end furlough?
Well, we think it's going to end at the end of June, but we're not sure. It may trickle on beyond that. The current assumption is it's going to end at the end of June. So ideally, you'll have a furlough agreement in place that says that tells the employees what's happening once you get to the end of furlough. It is the case that some people have put people on furlough perhaps without having that kind of agreement in place. So it's probably fair to say you'll need to give a little bit of warning about coming off furlough. Some furlough agreements give you a day's notice of coming off furlough, but if you haven't got that in place, we would advise a bit of warning. The employer can really pretty much dictate when furlough will end. Given the current job market and assuming your employees are going to come back on either on full pay or on an agreed amount of reduced pay, you're likely to get your employees back, even if you do a fairly abrupt furlough end, because frankly, in the current job market, most people will be fairly pleased to have a job. So that's the response to that in terms of taking people off furlough. But I'm happy to take any questions on that point.
I don't think we have any questions on that at the moment, but I do have one myself. Can an employer make employees on furlough redundant? Because I think that is a concern.
Yes. So this is a really big topic at the moment, as you can imagine. So briefly, yes, you can. There was some concern about this originally because the coronavirus job retention scheme, the CJRS, was actually supposed to prevent redundancies. It certainly staved off redundancies for people. Yes, you can. You need to obviously consult with your employees about that. If you have employees who are serving out part of their notice period, or all of their notice period, for redundancy following consultation, you can have them on furlough to do that. They can be furloughed for the notice period. That is possible. Right. Our understanding, and I have to say the Treasury Directive and the government guidance either contradicted one another or wasn't clear in the first place. However, our understanding is that notice can be paid through the furlough scheme, the reimbursement scheme, even if people are being made redundant at the end of it. But you do need to get your timing right on it.
Okay, great, thank you. Thanks, Sheldon, Phil and Jennifer. I really appreciate all that information, really helpful for businesses dialed in. I'm now going to just move to Clive and Pedro at First Office Hub. So we have a lot of questions on offices. And before we talk about COVID-19 affecting our office life as we know it, can you just please firstly state what the serviced office industry in London prior to the coronavirus lockdown was like?
It was very, very strong. London was probably the strongest market in the world, along with New York. There was over 200 different serviced office providers in the market, more than 1,200 different centres, and it was growing quickly every year. I mean, the larger providers like WeWork and Regus and Landmark were opening new offices all the time, and small entities with 1 or 2 buildings were coming into the space all the time. So it was very, very strong, and certain markets were opening really quickly, like Victoria, King's Cross. In 2019, serviced offices took 6% of total office share, but accounted for over 35% of the business, of the actual transactions that year. So it was growing exponentially, really quickly.
Right. Okay. Thank you. Thanks for that. So how do you think COVID-19 is changing our working habits?
Well, obviously, definitely a lot of people working from home, probably most now. And I think that'll continue to happen. But I also believe that people are creatures of habit. They like to get out and be with other people. And having been someone who's worked from home myself for quite a while, I think that you're not quite as effective working at home. And it takes some time to adjust. So I think over a period of time, I think that people will slowly come back to working in offices. But I think it will take time. I think we've seen quite a bit in the press about shift systems. And obviously in London, one of the concerns is the commuting. So people coming in on trains and tubes and buses. So there's talk about 7 offices being open 7 days a week and splitting up time amongst their staff. Maybe half the staff come in on Monday, Wednesday, Friday, some come in on Tuesday and Thursday. So I think that's definitely going to happen. And I think some of the larger companies will start to open satellite offices. So instead of having just one large office in London, they may have offices out in outlying areas closer to where their staff live. So instead of them having to commute into town, they can actually go and work in these satellite offices where they can drive to work.
Okay, interesting. You obviously do a lot with serviced office operators. What are they doing to entice new clients? Are they even thinking about that at the moment?
They are. I mean, the majority of the centres are still open. And most of them are working like on, heavy discounts and delayed start dates. And we've even got one provider that actually sends a chauffeur to pick up the staff and bring them to work.
Wow. What company is that? I'd love to know that.
One
Has
Avenue.
To be a big... Right, okay.
Yeah, they actually will send someone to pick up your staff and bring them to work. And they do the same for viewings as well.
Really?
So if anyone's looking for an office, they'll come and get you and bring you to the office.
Interesting. So what are they doing to keep existing clients? Because obviously there's a lot of rumours about offices possibly, downsizing. So
yeah. Well, I think the majority of them, obviously, because they're taking space from their landlords, are working with their landlords to get either deferred payments or rent reductions, and then they just subsequently are trying to pass those along to their clients as well. And there have been a lot of people left their offices for sure. We've seen that in the weekly availability that there's more space. But they're offering rent holidays, contract delays for deals signed prior. So if someone signed, we've got 3 or 4 clients who signed just before the virus outbreak, and they have been allowing them to extend their start dates. So people who signed back in February and March, now they're saying, oh, you can start in June, July, whenever it happens. So they are trying to work as strongly as possible with their people as they can.
So they're being a lot more flexible.
Absolutely, yeah. Where they can.
Interesting. Yeah, okay. Interesting. So obviously we're hearing a lot about everyone's having to work from home, big emphasis on technology. So I imagine you'll see quite a lot in this, but what changes do you expect to see with regards to building technology?
I think things like automatic doors to the building, so people don't have to touch the doors, voice operated lifts, like an automated concierge service, even these holograms where you don't have to actually speak to people to get into a building, sterilizing of UV lights, enhanced ventilation systems, and basically more and more contactless situations throughout the buildings.
Wow, heavy investments then, isn't it, really?
Yeah, absolutely, yeah.
Fascinating. And also I heard things like automation, voice technology, like Amazon Alexa for business, for example, could become a new interface.
Yeah. I mean, I haven't seen too much. Pedro, have you seen stuff on that?
Yeah, the premium providers had already integrated a lot of Alexa tools into their meeting rooms for video conferencing or dimming the lights in the room. Things like also making the glass around the meeting room opaque. They'll connect that with Alexa. So
wow,
that particular office is one of the most expensive in Victoria. So I think it's a expensive piece of kit that slowly will become cheaper with the years and possibly more affordable to other operators as well.
It's interesting because, I mean, according to data by an expense management provider, Embus, the most frequent employee expenses in the first half of March were computer monitors, desks, office supplies, keyboards. So a huge amount of money has already gone into this, hasn't it?
Absolutely, yeah. I mean, I don't know what percentage of the market is actually working from home, but I've got to think it's 60, 70%. I mean, I don't think anybody on this course isn't working from home. So, and I actually
despite your virtual background.
Absolutely, and I don't know anybody who's going into an office at the moment. So, and we speak constantly to all of our clients, and they're all like on hold at the moment.
Okay. So obviously, I mean, we work in a very lovely big office. And one of the things that I think a lot of us are probably thinking about before we go back is cleaning. So what changes, you kind of touched on it, but what changes do you expect to see with regards to cleaning?
Well, I think a lot of it's in place. I mean, most of them have, because these buildings are already open, they've started to put these enhancements into place. So, increased frequency and scope of daytime cleaning and sanitization. I think you'll start there. I mean, anyone who's been on a cruise ship will see there's hand sanitizers everywhere. I think you'll start to see that in offices. They're talking about having those at every desk, hand wipes for cleaning desks, no sharing of desks, provision of masks and gloves and protective equipment to community teams and members, touch-free soap dispensers, just overall just reduced touch points. And like in the kitchens, only one person can go in there and work in the kitchen, and instead of everybody going in and helping themselves. So I think they're all extremely conscious of what's happening, and they're all doing this already. So
right.
I mean, we see emails constantly about updates from the providers about what they're doing relative to cleaning. It's a big thing.
Yeah, I mean, one concern I guess is air conditioning. So we've heard a lot about companies, or read a lot about companies amping up their ventilation systems. Are you hearing that as well?
We know they're all looking at them and reviewing their existing systems to make sure they're they're as efficient as possible. So that's definitely something that's going on.
Okay. Clive, we've actually had a question come through. Lisa?
Yeah, 1 second. So yeah, we've got a question here about office space. It's already been covered partially, and I'm sure it's been quite popular with your clients. Is there any rebate for payments to be made on office rent during this period? So basically, can we get a rebate or discount on office rents during this lockdown? As you know, a lot of the service office space aren't being occupied at the moment, but people are still paying rent.
This from existing clients?
Yeah, this is for existing clients.
Well, from I'm not sure what Pedro's seeing. I'm seeing whereby the provider might say to them, you can skip 2 or 3 months and add it onto the back of your contract. So but they're definitely trying to work with the clients as much as possible.
I think some providers that are on lease themselves, they'll look at their landlord first to see if they get a rebate themselves, and then they can pass on to their clients. We're certainly seeing a greater support from operators that own their own buildings.
Okay.
On that instance, yeah.
So, I mean, a lot of our clients are in co-working buildings. We've talked about serviced offices, but have and will co-working buildings adapt their workspaces for when restrictions have been reduced?
Well, I think you're starting to see, I mean, I saw a WeWork release some stuff, and I say, we see this every week about people who now maybe have who need, I mean, actually I'm working with a client, a London Partners client right now, who've got 3 staff, but they're taking an office for 6 people so that they can self-distance properly.
Oh, okay.
Yeah, and then I think that we're starting to read that they might be putting up perspective, you know, like you see in the supermarkets, separators between desks. Don't have staff facing each other. You know, sanitizers at every desk. A lot of signage in the buildings about keeping you know, self-distancing. The 6 feet rule is all going to be there. So, I mean, obviously, it's only as useful as the people who are working there. But I mean, it definitely is the big effort to take it. Yeah.
Interesting. I mean, I read that Cushman and Wakefield is testing a new design concept called 6 feet office, in which they visually displays unique foot traffic routing in the office to keep people recommended 6 feet apart.
Yeah, and I think like walking in the corridors in one direction.
Oh,
so
okay.
people aren't coming and going. So if you come out, you have to go in one direction. You can't kind of cross staff coming in the other direction. So that's, I'm seeing that as well. I mean, we're seeing in the meeting rooms that you know, they're set up with spacing, constant reminders on the video systems, on the televisions throughout the properties about what you have to do.
Right.
So they're extremely conscious of it.
Okay. I mean, will co-working buildings and spaces reduce their rates based on the current situation? For example, the client that you just mentioned who was going to have a 3-person now going to a 6-person, will they get a discount on that? How would that work?
Yeah, I mean, they're not actually reducing typically their base rates. That what they're doing is offering good discounts. So the one I'm working with at the moment, we're looking at close to about 30% off on a 6-month contract. But they work in an industry that's very, very busy because it's coronavirus related. So
yeah,
but they were conscious of the fact that the discount should be there.
Right. Okay, good to know they're conscious of it. Will the concept of multiple people sharing a large co-working area survive, do you think?
I think that the actual Hotdesking is going to be a bit of a struggle because obviously people don't want to use a desk that someone else used an hour ago. So I think that we'll see that. I think the fixed desk will work, but I think obviously it'll be in a lounge where maybe there was 40 desks before, there may be only 20 now. And you know, so I think the fixed desk will survive, but I think it will take time for that to evolve back. Pedro, you see anything like that? I mean, I just think people are going to be working at different capacities, and it's going to take time.
Probably half capacity in any co-working open space environment anyway, yeah.
Okay.
Or less if the facilities don't allow a proper self-distancing.
Yeah. Okay, thank you. I mean, what do you expect SMEs to do when the lockdown is lifted?
I definitely think there'll be looking at more like shifts and rotas and you know, whereby if I've got 6 staff, as I said before, maybe, you know, half of them come in on Monday and Wednesday, half come in on Tuesday and Thursday, and they rotate the Fridays. I think some companies will start to work on the weekends, the bigger ones, to be able to push the staff out even more. I mean, I saw a lot of talk on the BBC about 7-day working weeks for companies now.
Wow.
Yeah.
And how do you feel, or how do you see large companies, how will large companies work going forward?
I think that the managed solution, and you know, obviously a managed solution is effectively a serviced office for large corporations. It was becoming very popular before the outbreak, but it allows large organizations to control their expenses, manage their cash flow, puts them into a short-term deal instead of, I mean, if you take a lease in London, you're normally looking at 5 to 10 years. You can take these managed solutions on 2 to 3 year basis. They give you the flexibility to grow, reduce staff. So there's a lot more control. I think that we'll start to see that grow even more than what it has been. And I say, it's been a fast growing business already. We've seen a lot more of it in the last 12 to 18 months. And all the large providers are accommodating that now. They're all looking for staff to take, I mean, they take a building of 5 or 6 floors, if they can get 3 large companies to take a floor each, it kind of eases the burden on the rest of the space.
Yeah. Okay, and thank you. And finally, what about meeting rooms and also those, you know, everyone's been so big on these private phone booths and things like that, which now just feel like full of germs. So how would that work?
Meeting rooms, as I touched on a bit earlier, I think that you'll start to see, you know, a meeting room for 8 will only accommodate 4. They'll have, you know, so they might put 4 people in the meeting and have people on video conferencing as well to be able to accommodate that.
Right.
Sanitizers, cleaners, maybe even the separators at the desk, the perspex separators. But
Yeah.
I think definitely, like we're doing, I think the Zoom type product will become very big for the meeting. I'd imagine over the short term, the use of a meeting room space will go down.
Okay.
Yeah, for instance, like, you know, WeWork give free meeting rooms, and my client now who I'm working with wasn't even interested in the meeting rooms.
Yeah, I can imagine that's really going to change.
Yeah. Yeah.
Okay, thank you guys, really appreciate that. We will have future sessions over the coming weeks and months that will continue to cover a wide range of topics, so please stay tuned to everyone. That's to everyone listening in. And before I wrap up, Lisa, do you just want to speak about the Zoom poll quickly?
Yeah, so we've got a Zoom poll here. It's just for feedback on our session to help us shape our future sessions, because as you know, Karen's just said that our sessions will be reduced to 2 times a week, which will have a more focus on the recovery and going back to business. So you can see on your screen the feedback poll, and there's 3 questions. And if you can each answer that in the next 30 seconds. So the first question, how likely are you to recommend these sessions? Second one is, how helpful did you find this session today? And the third one is, how engaging and interactive did you find the format of this session? So I'll just leave it another 10 to 15 seconds. Thank you for all those who are already voting. Okay, and we'll wrap it up in 5, 4, 3, 2, 1. Thank you.
Brilliant, thank you. Thanks everyone for voting. I'd like to thank all of our partners for attending and for all of your great, all the great information that you shared today. Sheldon, Phil, Jenny, Clive and Pedro, really appreciate all of your time. And thank you to all of our participants. Our next session is next Wednesday at 4 p.m. British Standard Time. You will get a follow-up email with details of this event sent to you. We also have a WhatsApp Good News Room number that it's just about to come up. At the moment, you're gonna have a lot of good news stories of offers and things that clients and our stakeholders and partners are doing for businesses during this time. So I highly recommend you just send your number, a name, even to that number, and you'll get those. They come every few days. And then finally, you'll see all of our emails. Please feel free to contact any of us directly if you've got any questions that you still need answers to, or if you want to just talk about anything that's already been discussed. And that's it from us. Thank you, everyone. Look after yourselves and stay safe. Bye.